Okay, before we get started here, let's take a look at our terms and conditions page here on Z Trades. Those of you watching, if you haven't read it, agree to that as well as our disclaimer. If you don't agree, don't join the Discord that's right down here and don't watch this video. If you do, feel free to watch the video and feel free to join the Discord. Let's talk about FOMC that's coming up. Okay, and we're also going to go into my long-term view ahead here. Why is it so red right now? Am I looking into the future or something and I see blood everywhere? I don't know. This is weird. Did I get a sunburn? I don't know what's going on. But let's talk about my future outlook here on the market going into 2025 and 2026. So by the way, I'm not sunburned. I'm looking into the future, and it's this color. It doesn't look good. Anyways, let's just jump into the short term real quick. I should make these separate videos. I really should, but I'll lump it all together because we need to know what's going on. And keep in mind, this is my opinion. This isn't financial advice. Look at this over here with RSI going lower and lower and lower, with SPY going higher and higher and higher. Sketchy, sketchy, sketchy. I don't like the looks of that, right? And it's just going higher. So let's take a look at SPY on a daily. All right, and see what we got going on here. We have, let's go ahead and turn the chart patterns off. We've got an inverted head and shoulders, a beautiful one. I've been calling this out. I didn't think the shoulder was going to dip. I didn't think it was going to dip this hard, but it dipped. So we have an IHS. Left shoulder, head, right shoulder. Now, if this was a line chart, it would be a lot easier to see. But this is pretty clear to all of us what's going on here. IHS, obviously this whole level up here is an area of resistance. That entire area right here. Let's go ahead and make it just like that. We need to break through that. We also have a 1, 2, 3 reversal right here. Let's see what happens. We may dance around this week. I'm still bullish. I could be wrong, but I'm still bullish this week of FOMC. At the end of the week, we have quad witching. So September quad witching is an event every year. Yeah, I mean, it never misses. It could possibly miss this year due to the fact that we're probably cutting rates. I'd say there's a 99%, I'll be realistic, 95% chance. The longer the Fed waits, which they've done every time, and we'll go into what happened every time. After there was a rate hike cycle and then they cut, what happened every time? No, don't think of COVID. That was a separate scenario. We'll go over that. Those of you that know, study stock market history. But I'm expecting us to peel off just, at best case scenario, a bit. We may be bearish. We may be bearish in September. I still expect us to be bullish for into Q4, right? Into this year, I should say. Now, I'll go into elections and all that in a separate video and what I think and my thoughts there, which my thoughts on the rate cuts and elections are different than everybody else's. So, but keep in mind, if everyone has the same view, 98% of traders lose. So if you have the view of the 98%, right? It's simple statistics, but that's not why I have a different view. I'm just looking at history. You must know history when it comes to long-term, midterm trades, if I'm doing it for like a year out, something like that. But anyways, let's just take a look here. Yeah, so I'm bullish this week. Friday is quad witching. I'm bearish on quad witching. Where we're going to go for the rest of the month, heads or tails, right? Let's see how far we pop out of this. It would be nice to see us pop up out of this, right? We could pop up. Let me go ahead and adjust this a bit. Come down at some point and bounce out of this range into the end of the year and break 600. That would be really cool. I'd like to see that happen. So we'll see if I'm right on that. We could dip first, then pop up and break it, right? At the end of the year, I still expect us to be bullish. So I'm not gambling on FOMC. I'm definitely taking I have some positions on gold as well as bonds for FOMC, some options plays, so we'll see. Let's take a look at the second part of this video. Let's jump into that. So this is the short term, the noise. Let's jump back on QQQ here. Let's pull that up. Let's go to a monthly chart, which everyone hangs out on hourlies to swing trade in 4 hours. What is going on anyways? Okay, I'm going to do this real slow like you guys are dumb, all right? Then I'll pick it up. I don't think that all of you guys are dumb, but I'm going to act like you guys are here. $50 to 119 in a matter of, a good, we went up 100% in basically a year. What happened over here? We cut interest rates after they were hiking them. And what happened? What about over here? We were raising interest rates starting back over in here, and then we cut them. And what happened? Let's take a look at the federal funds rate. Here we go. 1999, right? 1999, 2000. And then we cut interest rates and we collapsed. All right, we started to hike interest rates. Then what happened in 2007? We cut interest rates, right? And then it dropped. We ended up dropping interest rates. So we were hiking interest rates, then we cut them. All right, what just happened on QQQ? We're hiking interest rates, and then they cut interest rates. Whoa, wrong chart here, or wrong page. Hiking interest rates, cut interest rates. Hiking interest rates, look at the time, 2004 to 2007. Hiking interest rates, okay? Cut interest rates. Let's take a look. I did it again. I just did it again. Let's take a look over here, right? Hiking interest rates, we cut them. Hiking interest rates, we cut them. There's the 2008 financial crisis. There is the dot-com bubble. We had 9/11 in there, on top of that. That didn't help. But it led to us going into violent QE, which is where gold finally started to pick up some steam after it had been asleep basically since the 70s, 70s to 1980-ish. Gold's never looked back. Like right over in here, all this basically just turbo boosted money printing. And then this was just the cherry on top. And then we had COVID. And that was just the whammy that came in. We have over milked the monetary system. So what am I expecting from when we cut interest rates in 2020? There's monster bearish divergence right there. Look at that. I have never seen that till now. I just noticed that right now. There's bearish divergence. Market's going higher, RSI is going lower. I mean, you all tell me. If I'm wrong, tell me why. Now let's go into what happened before and why I think that we're going to crash. Am I going to bet and gamble on puts? Absolutely not. Never, ever am I going to bet a black swan. Everyone wants to be Michael Burry. You're going to get burned doing that. You're not trading with other people's money, and have a team around you of people who have PhDs in math approving your trades. All right? You're using your own money and you don't have a PhD in math. Sure. I'm sure that if somebody wanted to, you could get lucky. If someone wanted to take a debit spread for $100, who cares about $100, right? Am I going to be doing that right now? Absolutely not. So what's my plan? My plan is pretty boring. It's treasuries and metals. I'm already deep on metals and I'm already deep on treasuries. I don't need to do anything else. And then I'll be trading in the midterm and short term. And we drop, I'll catch rallies up, take it on the way down. And then corporate bonds, when interest rates fall and we're not making any money on our money sitting in our accounts like we are at Fidelity and Vanguard, where we're getting 5 to 5.5 with our money sitting there that we're trading in the meantime while it's sitting there. Corporates, it's real simple, and it's actually a lot of fun. At least I think it's fun. This is why the light on me is red right now. I believe, and I'm calling it now, and whoever's in office, they're going to blame it on them, right? I mean, it's kind of too late at this point, but they're going to blame whoever's in office next year, even if there would have to be no one in office. There's going to be someone, to blame, which is a very long conversation to go into. That would be like a 3-hour video to explain everything and what went wrong and who and where and what led up to this. There's many, many people that led up to this, but I'm already starting to get into it. We're not getting into that right now. Again, let's go over this one more time. Hiking interest rates, and then we cut. Hiking interest rates, and then we cut. Oh my gosh, for the third time. Hiking interest rates, we cut. Hiking interest rates, we cut. All right, when we cut during COVID, we weren't hiking before. Now, we had hiked them a little bit. And this, if you guys remember, Trump got angry. He said, I think they should be negative. Why have we left them at almost zero under 8 years of Obama? The second I get in office, you take it up. The economy was still doing well too, right? The economy was doing fantastic. The federal rate did go up. Look at this. The second he got in office, they left it like this under Obama the whole time. The second he got in office, this is why he got mad. And he's like, take it down. He told Jerome Powell he should be fired because Powell said, we're going to cut for 4 consecutive quarters, or we're going to hike. And it dropped. And then the market dropped. And Powell came out, Trump came out, he bashed him on Twitter. You know how he used to make fun of people on Twitter? And they're like, all right, fine, let's go into QE, which ended up being a mistake. We didn't know COVID was going to hit, right? So we hiked, then cut. There was a crash in 2020. It wasn't for this reason. The market and the economy was doing, better than it's been doing in like 50 years. We had inflation at 1.9. Unemployment was fantastic. The numbers were unbelievable. The market was ripping on good things, right? So then COVID happened. That's going to be a separate video on where we went wrong there. Doesn't matter who was in office. The same thing would have happened with how they dealt with it. Right? It has nothing to do with shutdowns, with how we ended up with this much debt, or how early we shut down, or what we, whatever. It has to do with the amount of they was overkill on the stimulus, and it doesn't matter if there was someone on the left or someone on the right. The same amount of stimulus would have went out, in my opinion. Doesn't matter. That was going to happen. Now, how we dealt with that, the issue, the aftermath. Now that matters, right? But anyways. They had waited over here in the 2008 crash too long to cut interest rates. All right. Now, so as it's ripping up and the federal funds rate is rising and certain things are starting to crack and snap and people are hurting, the longer you leave it up, it's not just the fact that it's going up, it's how high it is and how long you leave it there. And then it starts to negatively affect. So what I'm trying to say is it's not the fact that it's constantly going up. It matters where it's at and how long it stays there, right? Because if we had always been there, then the economy would have been built on a higher rate, right? So, like back in the 80s, anything below 7 was really bullish. There was a whole world built on rates being high, right? That's not the case over in this giant gap over here. Everything around us was not built on rates being, the federal funds rate being at 8. It's built on it being like basically 0, So the economy is hurting right now. If you look at SPY, you're thinking, look, I'm not doing it wrong this time. If you're looking at the Qs, you're like, no, it's not. It's doing fantastic. What's really moving the Qs and what's really moving the SPY? What's really moving the Qs and SPY is basically 10 stocks. It's moving the whole thing. It's 10 stocks. 10, maybe 15. What are those stocks? The top 10 in the S&P and the top 10 in QQQ where the biggest allocation of that trust that holds all those equities are the same stocks pretty much, right? They may be off just by a little bit, but they're pretty much the same. Visa, look at Visa. Look at this thing. It's a freaking monster. MasterCard, Meta's doing fine. They're making money. Nvidia's Nvidia. I mean, what else? Microsoft, Apple. You guys get where I'm getting. You guys know what I'm getting at when it comes to this. Google. These stocks aren't hurting, but the top 10 in the S&P doesn't make up every company in the United States, right? These top 10 stocks are what's driving the S&P up. The whole thing is rising on those stocks. Yes, I know financials are doing pretty well and some healthcare companies, but there's a lot of other companies than 20 to 30 stocks in the S&P. So they have waited way too long. They waited too long. Where did they go wrong? The Fed waited too long to hike interest rates. They should have been doing that in Q1 or Q2 of 2021. If they were going to wait till later, then they needed to do it faster. They need to start off with a point, but then say we may just do a quarter from here on out. Then the next two, Fed meetings doing a half point. And we could be out of the woods already earlier, but they should have started off with 1 point to 0.75 back in 2021, early 2021. After COVID, people were swimming in cash. I mean, the financial system was broken. It made people millionaires all over the place. So since they waited too late to start and they've waited too late to cut, just like over here now, I'm not predicting we're going to have an '08 crash. I'm not saying it's going to be that bad. I don't know. But I do believe that these rate cuts, this QE, they've waited too late. It's kind of almost like, it could be like this, because SPY has been running up. Let's go to a lower time frame. SPY has been running up and anticipate. We have not cut interest rates, right? This dropped because we hiked interest rates over in here. All right. And we've ran up, basically, we'll just make it, mean, median, and mode over here. 389. Let's just say 390 was the kind of average of SPY. And it's ripped to freaking nearly, $564. It could probably end up being $600 by the end of the year. Maybe $580 by the end of the year. Maybe in January, $600. So, but there was no rate cuts, and we've ripped this high. I mean, we've exploded on the S&P in anticipation of the cuts, because the market's not going to be like, no, I'll wait for them to cut, then I'll get in. Everyone's going to be like, well, I want to kind of get in before they cut. And then the companies, the top 10 companies, they're not hurting. Apple isn't hurting. Microsoft isn't hurting. Nvidia isn't hurting. Google isn't hurting. And when there's inflation, okay, so the goods cost 7% more, we'll raise prices by 10% and make 2%. Oh yeah, inflation, yeah, and make 3% on the spread, right? So, and then delegate a lot of things to AI, increase profits, blah, blah, blah. So this could almost be like let's pull up space and use that as an example, okay? Virgin Galactic. Let's go back, yeah, over in here for the launches. These were launches over here, these pops. I've been short on this thing, and it has been fantastic. I got out in the 5s over in here last week. I've been shorting it since somewhere over in here. Anyways, let me move my face over here. Hey guys, we're going to launch 1 month, October 15th. I'm throwing dates out there. So it's going to run up. The launch was successful. It dropped. New people, wow, the market's a scam. It was successful. No, the people that got into traded are out. Right? If it's a good launch, it falls. If it's a bad launch, it falls. No matter how good the launch is. Doesn't matter on the success of the launch. It's dropping. Right? Launched again, it fell after. Launched again, it fell after. So what I'm trying to get at is playing the, not the buy the rumor, sell the news, playing the anticipation, selling the event is my saying that I've made up right here at Z Trades. So it's kind of like the same thing, and it's worrying me a bit on SPY with the run-up in anticipation of the rate cuts that are about to happen. Right now, I don't think that we can go back on SPY. Let's go all the way back to 2008. This looks so slow. There we go. There we go. Hey, looks like I charted divergence out. I forgot I even did that. Yes, there it is. Let's see if I can get this up right. All right. I don't know why that's floating up there. Anyways, we ended up cutting interest rates right. It was somewhere over in here. I don't know the exact date, and I'm not going to look it up live while I'm recording a video. It was somewhere over in here. We started cutting interest rates after they had been going up. All right, so the market had pretty much held for a while, and then we had somewhat of a run up in December, and it held up till May pretty much of the following year, and then that was a wrap. Now, do I think it's going to drop in May like 2000? No, that has nothing to do with now. But there was a delay before we dropped. I don't think we would drop immediately, and I'm not saying that I'm going to buy puts. All I'm saying is be wary. No, this isn't rate cuts like COVID. This is rate cuts like the 2008 and the dot-com. And both times that that's happened, right, where we were hiking and then we cut, and then we were hiking, then we cut, what happened? What happened those two times, I should say? We dropped. Yes, in the 1980s. I don't have TOS up right now. If you can pull up SPX and go to a monthly, go to the 1980s when we were going through all this. We were already in a recession. Already. At the end of Carter, when Reagan got in and appointed the new Fed chair, Paul Volcker, the guy who would smoke cigars in the Fed meeting. You couldn't even see his face. It'd be cloudy. They were taking the Fed rate up to 15. We're at like 5 right now. 3x higher. Can you believe that? So we were already in a recession. It was already hit. Everything was already dropping, and the economy was doing bad. This is delayed, right? The economy, we're feeling the effects after. The economy was already doing bad for years and years, and it just got worse with the rate hikes, and then they cut, and then we boomed all the way through the 80s. Yeah, there was Black Monday. It bounced right back, and within a year or so, it recovered from there. So, again, I am bearish at some point. So I'm going to keep my eyes peeled. I am worried. I may have to lighten my load here on what I'm holding going into early 2025. We'll see. I'm hoping here for a bullish end of the year. We'll see what happens. It is an election year. We're usually bullish on election years. I'm not just basing that off last time, because last time interest rates were low. Doesn't matter what happened. We were going to go up. But everybody keep your eyes peeled going into 2025. Keep your eyes peeled. Watch out, okay? If you guys like this content, make sure to like and follow for more. I'm going to do a video on real estate and how everybody's wrong on that as well. So it's logic, guys. All this stuff is just, somewhat logic. If you guys like this content, make sure to like and follow for more. Join the Discord, completely free.